we'll be all good. Good afternoon and welcome to today's CFO Lunchtime Live. I'm James Solomons and today we'll be navigating tax compliance in the US. Expanding into the US offers significant growth potential for Australian and New Zealand businesses. But as we all know, navigating the US market is notoriously challenging for even us CFOs. And so therefore, it is good to get some experts on the line. CFOs do often find themselves overwhelmed with navigating the US, from registering with authorities, tracking tax exemptions, calculating the correct tax and sales tax liabilities, and ensuring accurate tax remittance and filing. But fear not, as I said, we've got to get experts on the line. So today we are joined by a fantastic Trans-Tasman panel of CFOs and leading experts to share the knowledge and insights needed to successfully achieve US tax, sales tax compliance, ensuring your business is well prepared for seamless expansion into the US market. So let's meet today's panel. Joining from Brisbane, we've got Brett Graham, CFO at Dish. From Auckland, Cameron Irons, Finance Director at AS Colour. From Sydney, Chris Calvary, Head of Sales and Partnerships at Avalara. And from Melbourne, Andrew Wilson, CFO and Company Secretary at FunLab. Good afternoon, panel. Thanks to all of you for taking the time to be online with us today.
Good afternoon, everyone.
All right. Now, as it is a live discussion, as it always is, if anyone from the audience has a question, please type into the chat box and we'll attempt to answer them as we go along. Otherwise, we will have some time at the end for Q&A. But we do have a lot of ground to cover today, even though Australia and the US are exactly the same size. We have a lot of ground to cover today. So let's get into the questions. Andrew, first question is to you. Let's set the scene. FunLab exists across 8 brands, including Struck Bowling, Archie Brothers, Holy Moly Golf, and Red Herring Escape Rooms across over 40 locations across Australia, New Zealand, and the US. It was recently acquired by private equity firm TPG Capital to help fuel the growth. So, Andrew, can you tell us a little bit about your CFO journey and how you approached the growth into America?
Sure, James. Thank you. Going backwards to go forwards, my CFO journey started with Boost Juice, which is now Retail Zoo, in 2008. I spent 8 years there at that company before joining FunLab. And I've been very fortunate to be at those companies, or these companies, in the times that I have been there. At Boost Juice, as it was, we expanded to become a QSR platform, which is Retail Zoo, and expanded it through acquisitions and growth of its brands and further brands we developed to global franchise expansion, and sold that business, built it up and sold it twice to firstly Riverside Private Equity and then Bain Capital. And similarly at FunLab, I joined FunLab. It was a bowling anchored company at the time, and we established that into an entertainment platform where we have over 50 locations now in Australia, New Zealand, and the US. We have grown via inorganic and organic growth, developing our own brands, and in this time also we built the business up and sold it again twice to private equity, to Next Capital and TPG in 2001. And when we were acquired by TPG, our approach to the US was just part of a broader strategic plan, is taking our brand into new markets. We dabbled in Singapore for a little while, but COVID got in the way of that. But we truly believe we're a unique platform and offer something very different to our competitors in the markets we're operating in. So we have spearheaded our entry into the US via Holy Moly and leveraging off some significant brand awareness from the television show that was there, Holy Moly reality TV show held by Disney. And so we initially entered via a small acquisition in Colorado and California, reopened those as our own brands, and now the growth journey has started via organic expansion, opening up new units in Texas and more to come.
Fantastic. And how many mother funners do you have working for FunLab around the world?
We're almost
slide that in.
That's right. You got to be careful how you say it.
That's right.
We're getting very close towards 3,000. So yeah, it's a pretty thick culture we have, and it's a lot of fun, and a bit of a super highway we're hoping can be possible in the future between Australia and the US. We'll see.
Yeah, awesome. That is a lot of mother fun I was looking for you. Last time I'm going to bring that up. Brett, thanks for joining us. Retail and fashion, as we know, is a dynamic and rapidly changing industry with lots of challenges from many places. How has 2024 been for you? And can you share a little background on the growth, size, and scale of Dish and how this successful Australian business launched into the US?
Well, Ken, thanks for having me. Of course, 2024 has been nothing short of fascinating for us. As you said, retail is definitely an incredibly dynamic and rapidly changing industry, which I think brings both exciting opportunities and then also exciting challenges. Um, Internally, we've adopted a bit of a mantra this year, which is let's slow down to speed up. After the whirlwind growth post COVID, particularly from 2022 to now, we've had to take a step back and ensure that we're building the right foundation in terms of people, systems, and processes. So it's one of those good problems to have. A huge part of our growth has been in the US. We started selling online there in early 2021, and it's quickly become one of our top two markets. So the success in the US has really come down to the strength of our marketing, branding, and product, understandably. At this stage, our entire US presence is online. We don't yet have a physical footprint or local team, but we see that the US as a major growth market for us in the future, as like most businesses out there. And since I joined the business, one of the main focuses has been ensuring that we're fully prepared from a tax compliance and legal perspective for when the time comes to scale further. Earlier in the year, we partnered with Brett Blundy and the BBRC team, and doing this has been instrumental in that preparation. Their guidance has really allowed us to refine our strategy, avoid hefty advisory fees, and position ourselves to really explore how far we can go in the US market.
Yeah, fantastic. Cameron, thank you once again for joining us for another CFO Lunchtime Live. Your approach to the US has been a little different. Can you share some background on the growth of AS Colour over there and why you established AS Colour Inc. as a standard entity in Delaware and operated out of LA, Charlotte, and North Carolina?
Yeah, thanks, James. Good to be back on. AS Colour, yeah, definitely a battle, I guess, or a decision to go into the US. New Zealand and Australia were a pretty stable stake in the ground of success for a business. And Larry, the founder, always was a little bit nervous or reluctant to go to the US market. And it wasn't the retail side of the business that he was focusing on. It's the trade and wholesale that we have a lot more success in and is the main majority of the business. And a little old New Zealand company trying to go to the land of the T-shirt and try and sell T-shirts was always going to be a big battle and sort of tough win, but he did it. So New Zealand, we got founded in 2005 originally, and then Australia sort of 2008. And it wasn't until about 2015, 2016 that we really made the move to actually go up into the US. And we couldn't, because of the nature of the business and wholesale, we're selling 10, 20, 30,000 items of clothing at a time. You can't really air freight that and make any money off it. So we had to go physical, and we had to get warehousing, we had to get logistics, and we had to actually set up an entire business up there to be able to service our customers. So the Delaware piece was advice from tax advisors at the time to set up that in terms of the original setup. And then we've been operating out of California since that inception in 2016. And that was sort of the key focus for the business to start off with. California's the land of the T-shirt. Everyone there, it's sunny, it's hot. Is in a T-shirt, a bit of an easy sell. And then North Carolina, Charlotte's only a recent addition. So we've had customers sort of screaming at us for a long period of time to set up closer to that East Coast. You think you might be fine delivering T-shirts in 5 days across the country, but our customers, they're wanting them now because we're ultimately holding the stock out of China or Bangladesh or Vietnam, these blank products, and our customers are wanting these overnight. So we actually had to set up on that East Coast to be able to service our market and our customers quicker than our competitors. So that's the whole reason. It's that physical location to be able to service customers as quick as possible, and that's sort of changing the game. We own all our own logistics. We do it all ourselves. We're not through a distributor. So we've sort of changed the expectation for customers that we can do things a lot quicker, and now it's changing the market that they're trying to do things quicker as well. Be a huge opportunity in the US.
Yeah, very, very, very interesting. Three very different businesses online with us today, and it's going to be fascinating to explore in more detail as we go along some of the key aspects of expanding to the US. But Chris, to round out our opening questions, it's great to have yourself and Avalara on today's discussion. As we've heard, as I said from our panel, there's many different ways to launch into the US. For question to you, what are some of the most common challenges or misconceptions you hear CFOs facing when expanding into the US?
I think it's the we'll deal with that later attitude that I see a fair bit of a lot of Aussie brands, particularly in fashion. Fashion brands get excited when they enter new markets, start seeing sales coming in from areas they haven't even marketed to. But in the US, you need to be aware straight away of nexus and what triggers it.
Yep.
Nexus is basically a trigger for when you need to collect and remit sales tax. It can be physical nexus if you've got stock or people or even visit a trade show, or it can be economic nexus, where a state has rules on either the number of transactions or a dollar value, or both, because all states have different economic nexus rules, just to make it nice and easy. But once you trigger a nexus, you need to be charging applicable sales tax on every sale going forward and remitting that either monthly or quarterly.
Yeah, it's definitely lots to consider, and we've had a few previous discussions with Avalara at the helm, and some of the things are quite scary, and we'll get into some of those technical aspects as a bit later on. But thanks, gentlemen, for the opening discussion, as I mentioned. Now, I have a quick fire CFO question to the CFOs online on the panel today. First to you, Andrew, the same question to you, Cameron and Brett. As a CFO, what is the one thing that keeps you awake at night about doing business in the USA?
Well, because we're still relatively young in our journey, James, I'm still asking myself, what don't I know about the cities and states we're trading in? There's a lot of things that continue to get unearthed, and I'll answer it in two parts. The other one is what of this election? First time we've been there with this going on, so what will come from that? So I don't have any answers to that yet. We'll find out.
Yeah, absolutely. Cameron, same question to you. What's the one thing that keeps you awake at night about working in the US?
Yeah, similar to Andrew, it's the nuances of every single state. It's 50 countries in one. They're all unique. There's always something that's different that you think you can wing it or be okay with it and be all sorted. But yeah, surprise, surprise, you won't be.
Yeah, absolutely. It's 50 different states, and California is God, who then try to tax you regardless of where you are and where you might be on anything that hasn't been taxed. Brett, same question to you. What keeps you awake at night about doing business in the US?
Yeah, I mean, I've got similar answers. If we ignore the politics, if that's even possible for the US, I think, navigating the complexities of tax and compliance, particularly right now, because we're kind of at the pointy end of going through all of that. The US is a fantastic market with massive opportunity, but it's as the others have mentioned, it's highly fragmented when it comes to regulations, particularly around sales tax. Some states, the sales tax rates change from street to street. So good luck getting a staff member internally to track that. We've gone through the process of registering in multiple states and back paying liabilities, all with the support of Avalara. So making sure we're fully compliant as we continue to scale is always top of mind. I think what else keeps me up is just the regulations themselves, ensuring we've built the right systems and processes to handle them smoothly without stifling our growth. We're expanding quickly, and I want to make sure that we're staying ahead of any potential risks while maintaining the flexibility to adapt and grow in such a crazy market over there.
Yeah, absolutely. I mean, I been in Australia my whole career. I never like an email or a letter from the ATO, but when something comes in from the California Revenue Department, I freak out and I have serious anxiety because you never know what's coming. You don't want to get it wrong. It's clear that that anxiety, particularly being down here in Australia and New Zealand, is part of it. And it is a very, very different landscape. So Andrew, Brett just touched on it. It can be different taxes from street to street, but many CFOs certainly struggle with understanding even just city versus state versus federal compliance. Was this an issue for you, and what have been some of the biggest challenges or surprises for Holy Moly doing business in California, Colorado, or Texas?
I think Cameron touched on it before. I think it's better from doing business in America is more like the United States of America. There is a practical reality of operating a business like ours, which is on premise and bricks and mortar. There is no uniformed approach to particularly any city or state, but it's the sales tax and it's the payroll and employment things that are just so intricate and as mentioned, state by state, street by street, city by city. So that it's difficult to grasp, and I think you will learn through mistakes even as you go through it. You just have to. So our business, the challenge has been for our business, it's a combination of online sales, which is its own category in the US, very different to Australasia, and then we mix that with in-venue activities, food and beverage, and then alcohol is another thing into the US as well. So that's got different challenges. So we're having to live through all those learnings and those variables, and that's just the mechanic of doing business in the US in our space. So understanding those journeys, learning from them, adapting to them with system and process and awareness is critical. But it's just a challenge. It's just a challenge that's thrown out there. But the attraction is the volume of people. It's umpteen times the size of our markets. It is there. We're playing in a very live market in the US. The entertainment industry is enormous there compared to here. So it's a grind, but it's hopefully a very fruitful grind.
Yeah, indeed. Planning a trip to the US maybe with the family sometime soon. Just looking at the amount of money we're going to spend on entertainment is it's a little bit mind blowing. But it's true. There is a lot more available over there, but it is quite dynamic and competitive. Cameron, what specific or unexpected challenges have AS Colour faced in navigating the complexity of sales tax across different states in the US?
Yeah, the unique thing for us as Colour is what you call resellers or resale certificates, which is a whole nother can of worms that we sort of had to work through. And that is the fact our customers, so we sell to printers, embroiderers, brands, businesses that are ultimately buying our products, embellishing them and selling them on to an end consumer. And what that brings about is the complexity of actually not charging sales tax. So we get customers that give us what you call a resale certificate. We've got to then track tens or hundreds or thousands of customers' resale certificates, make sure they're actually up to date, they're accurate, they're legit, and then not charging sales tax. And then ultimately, if that customer's wrong or things like that, that can fall on us as well. So that was a big piece to get our head around. Obviously, the economic nexus side of things and selling remotely into different states is a whole nother piece as well, that you think you might be fine, and then the transaction side of things, it's not actually just a transaction being an invoice. 25 lines on an invoice is one transaction, so you can actually trigger things in different ways. So just the whole thing, you'd think you peel an onion back and you're done, and then you're surprised with a whole other piece of it. So it's still evolving. I'm still surprised every day. We're in the midst of a couple of audits in a couple of states at the moment that we're getting support from Avalara with as well, and navigating that. But it's keeps you on your toes.
Yeah, the respective IRSs of all the different states and regions, councils, locals, they love an audit. They love to come in and do an investigation. Brett, as the US market's grown for Dish, how has your finance function evolved or adapted? Any changes with internal processes to ensure your compliance with US regulations?
Yeah, well, I mean, I'd probably go so far as to say that Dish was a family family-run business not too long ago, prior to the minority sale earlier in the year. But we've definitely evolved. Now having P&E minority owners on board, and the likelihood of physical stores and DCs in foreign markets within 12 to 18 months, things have definitely scaled quickly. FY23 was also the first year we had to have our accounts audited, so we've been on a bit of a compliance and finance roller coaster across the board. But since partnering with BBRC, we've definitely had to up our game, which has actually positioned us well for tackling the growing complexity of US clients. I think one of the smartest moves we made, and that's not just because he's on the call, but was bringing Avalara on board to handle the tricky US sales tax piece. We also partnered with Flowcast to streamline our month-end process. So for those unfamiliar, Flowcast is like your dream digital end-of-month checklist. It's intelligent and automated, and so it's helped us close the books, way faster. I think my biggest tip: start researching early and talk to other CFOs. Jump on calls or webinars like this. But again, other CFOs who've navigated this before, especially if your business is growing fast, you don't want to be caught off guard when the IRS or state regulators start knocking for an audit. But I think more importantly, you want to be ready for when the business wants to set up a physical presence over in the US. You don't want to be that finance team that delays those key strategic value add moves.
Yeah, absolutely. Shout out to our friends at Flowcast. Jason and team have been previous Lunchtime Live sponsors, so they are very well known, Brett, in the CFO Magazine world. Chris, I've got some technical questions for you, and these always interest me as an Australian CFO with a global remit, as I'm sure many online today are the same, as well as those on our panel. For Australian businesses with both online and physical sales in the US, how does Avalara software differentiate between the sales tax requirements for e-commerce versus bricks and mortar transactions?
Well, the principle's pretty much the same for online and physical sales. Is the product taxable? Is the customer taxable? What's the applicable rate? The key thing to think about the sales of physical goods in the US, both in bricks and mortar and online, is that the taxes follow the location of the goods. So for online sales, this means the Avalara engine needs to consider the location of the customer, where the goods are being shipped to, and then it recognizes the tax jurisdiction that falls into. When it comes to sales in a physical store, the place of supply will generally be more straightforward. The goods are taxed at the location of the store itself. And because of this, our solutions can work quite differently with businesses selling through brick and mortar stores. They may not need a real-time API call every time a tax must be applied. So instead, our solution can also offer offline tax content, which can be pushed directly to the POS. And this can help manage challenges of the POS, which may not always be online, maybe a little bit old tech, and can also help address, usage issues where the business is selling high volume of the same items at a single location. You'll know the tax rate on that. You don't necessarily need to be calling every time. So the AvaTax solution offers both of these models through the same system, same content, same core content, to support businesses that sell through traditional, online, or even both.
Yeah, it's just mind blowing, right? It's certainly you need to be across this. So Chris, what strategies, and we've heard some already from the panel today, what strategies can Australian companies implement to stay compliant with these ongoing changes in US tax regulations? And one of your counterparts mentioned in an earlier session we had earlier this year over 10,000 changes in tax in the US in that prior 12 months. But what can Australian companies do to stay compliant in the US tax, especially in terms of multi-state filings and the remittance obligations?
Yeah, and it's more than 10,000 now in the last 12 months, so it just continues to go upwards. So my suggestion is I call it the 3 A's: advice, action, automation. Ensure you get an accurate, up-to-date advice, and then don't wait. It can take over a month, for example, to get registered in a state, and then automate. And I think the key thing here, talking to a CFO audience, is CFOs hire smart people to drive the business forward, not to spend time on manual tasks that could be automated. If you want to attract and retain the best talent, you want them doing stuff that makes the finance team the focus of the business and drives things forward, not, oh, I've got to do this monthly filing again, and I've got to do it in 30 states, and now we've got to do a quarterly one over here. So automate, automate, automate.
Yeah, absolutely. I don't think anybody would enjoy filing 30 different monthly sales tax returns, let alone, as you said, most of us don't like doing quarterly or monthly for a single region. So then, Chris, what's your advice, or what are the best practices that you recommend for managing that US tax filing? You've mentioned automate, but what else can go along with that?
I think you just need to get a handle on it early. Being tax compliant in new markets, it's simply a must. Tax obligations don't go away. You mentioned IRS earlier. They can be brutal. And I've seen too many companies either not understand or simply ignore their obligations, and it comes back to haunt. It really does. It can go back a long way as well. And this stuff can be complex. Tax in Australia is simple, isn't it? 10% GST, transaction every step of the way. In the US, as alluded to earlier, it's only paid by the end user. So there's 13,000 different sales tax jurisdictions in the US. A single zip code could have 7 different tax rates. Neighbours could have a different tax rate. I hear stories of people sending shoes to mum's house because she's on a lower tax rate than my house. So some states can have there's 4 states that don't even charge any sales tax. Some states have sales tax holidays where tax goes on holiday for a time period. And some customers are exempt, but they need to prove to you that they're exempt. Otherwise, they're not exempt. And as was mentioned earlier, in the way I put it, in terms of sales tax, the United States of America is anything but united.
Yeah, I love that. The United States.
United.
Yeah, you should, Andrew. You should trademark that. So, just hearing that last comment from you alone, Chris. The tax holidays fascinate me. Things like that. You've got to have technology, and that's a good segue into the next part of our discussion. So, Andrew, what led you to working with Avalara, and what have been the key benefits it has brought in terms of compliance, time, and resource savings?
We were exposed to Avalara by acquisition. So the business we acquired, which was a small M&A acquisition to get us into the States, was using the little brother, Chris Davo. So we got exposure to that and through research worked out we needed the bigger brother, so Avalara. What it's done for us is it's one of the variables we've been able to put aside so we can expand with certainty. So obviously everyone would be hearing the advantage around sales tax and the compliance and the variations around that. So it actually removes, in an expansive journey we're going through, it actually removes one of the variables for us to start thinking about so we can move forward with a bit of confidence. We're in 3 states at the moment, and we've got 3 more cities to open up in the next sort of 6 to 8 months. So I just think, when there's so much uncertainty ahead of you, when like us, you're young into a journey, something that can give you confidence and remove a variable is just so welcomed, particularly with the complexity that's there. So it's like hand holding through a journey for us. We're appreciative of it. It's really important, and I think the regulators in the US probably have got a few more teeth than the ones that we have in Australasia in terms of how they approach things. There's a bit more scaremongering attached to things, so we do want to get it right first up. So I'm very pleased that we chose to go down that path quite early.
Yeah, I think it's safe to say, you should never believe everything you see in the movies, but I do honestly believe that the way they present the IRS in the movies is what they are a little bit in real life. I think in some states they carry guns, and they are a little bit scary. So Cameron, you implemented Avalara directly into your website in 2021, 6 years after you launched, as you mentioned, into the US. What were you doing prior to this, and how has this changed your approach to sales tax compliance and reporting?
Yeah, we were doing it old school, and that's no way to probably attack the US regulations and compliance. It was manual. Obviously, the physical nexus was the main piece for us operating out of California. So that was the easy one. It was sort of through the change of legislation, I can't remember the name of the case law that really kicked it off in, I think, 2019, that made that big change and really went after all those e-commerce sellers.
Yep.
So those first years of operation were ultimately comfortable and fine around it, but then it really started to dial up in that 2019 when I sort of joined the business, and then realised that, hey, we're probably a little bit exposed here from a risk perspective, and especially the sales tax. The benefit for us was the resale side of things, so the majority of our businesses were actually resellers and not needing to be charged sales tax. So it was there was a calculation there, but you could remove a lot of it. It's only the B2C side of things that really the sales tax should be charged on. But putting in Avalara was just a game changer. Bolting in straight to the website gives you the confidence to know that we are doing things correctly. The second we breach nexus in a state, there's alerts that pop up in the solution to be like, hey, where you go, register. So it just allows you to take that worry and those sleepless nights away that someone could come knocking and have to try and battle through that, and then get the resource, being reactive rather than sort of proactive and having it up front. So you focus on the growth piece rather than at the back of your mind that something might come through and really bog you down for us.
Yeah, very, very good. We're going to certainly going to have some time for audience questions. So I've got one which I'll pose to the panel in a little while, but anyone else that's got questions, please do send them through. We've certainly got some experts and people who have walked the walk over there in the US. So now's the time to get those questions in. Staying on technology, Brett, what have been the key benefits for Dish that you have seen since integrating Avalara, particularly regarding efficiency and accuracy in your tax filings?
Well, I think like most businesses, or most finance teams these days, they're getting leaner and leaner, and it's not often that you'll see the traditional split in a finance team of controllership and FP&A. Sort of, there's more team members that can sort of put their hands into everything. But I think at Dish, finance is a lean team. We have lean teams right across the business, and I think perhaps that's the nature of the retail beast. While compliance is critical, it doesn't exactly directly drive revenue. So our focus as a finance team is on, well, what we want it to be is to partner with the operational teams. We want to be their financial advisors, helping them act as CFOs of their own areas. So for US sales tax, handing the reins over to Avalara, that's their bread and butter. The efficiency and accuracy they bring to the table is unmatched. That's what they do. That's their product. No one else does it more than Avalara, and it's a cost-effective solution. So let's be honest. No one in finance is exactly jumping up and down at the thought of managing the US equivalent of 50 different ATOs. One is hard enough. So Avalara takes that off our plates, so we can focus what really matters, driving the business forward.
Yeah, absolutely. It's definitely, as you said, no one's jumping up and down. You don't hear that coming from anybody, and if they did, you'd worry about their mental capacity. So I have a very specific question, and one of you may be able to answer, one of you may not. It may not even be relevant to you, Cameron. But the question is, how do US sales tax differences interact with the USA having special transfer pricing rules? I'm not sure if, Andrew, you might be dealing with the transfer pricing to the US, how that might interact.
Yeah, we are dealing with transfer pricing in the US. Not really. They're quite mutually exclusive things. One's an onshore tax and consideration, and transfer pricing is obviously intercountry. So they don't get tied up too much, which is probably a relief. So they're quite mutually exclusive from our dealings today.
Yeah. Anyone else got any thoughts on that, or has Andrew sort of captured that?
No, I agree. Yeah, agree with that. For us as well, it's the same scenario. The offshore piece is transfer pricing, and it doesn't sort of come into that onshore side of that actual sell of the product.
Very good. So it's what I thought. So that's good that we're all aligned. So Andrew, based on your experiences and with the benefit of hindsight, what advice would you give to other companies considering a similar approach to selling in the US?
It's a really good question. Something I think about often, actually. I think the first thing is do allow yourself more time than you think in establishing things into the US. It is very administratively slow and very process orientated. Highlighted even the simplicity, there is no tap and go generally, and in Australasia that doesn't even sound right. So it's very admin heavy and very process heavy, and it sort of seems from afar that the cities are doing this to generate local fees and just to run through things very slowly. So in our game of building a site, it's we thought Australia was tough, or the US is tougher. So I think allowing time, and I can see that how other companies would go there with an expectation maybe to have a certain amount of sunk costs as you get ready to develop and research and so on and so forth. Well, perhaps allow for a little bit more of a worst case scenario when it comes to the US, because it will take time.
Yep.
I think Brett touched on it before. You absolutely need to get some insight and counsel, legal, tax, financial, both onshore, but also from the Australian perspective or the Australasian perspective. You need both angles to come in on that, because it's so complex. I think the other thing, it's such a big country, the US, and it is split up into obviously states. It's be careful about how you want to enter, because taking on a whole country at once is a pretty big thing to bite. So use your advice, but I think probably the most valuable thing you can do is speak to people that are already playing in that field, and that'll trump any other advice you'll get. That's the practical reality of how business is conducted, what to be watchful for, what to be mindful of for, the tips and tricks, what systems to use, what systems not to use, etc. So bit of a long-winded answer, but they're the three things that I would definitely take away as a learning for next time.
No, very good. Cameron, same question to you. Anything from hindsight? What advice would you give to other companies considering that a similar approach?
Yeah, get educated as early as possible and just make sure you've got that understanding and knowledge of what's required. It is so complex. There's no two ways about it. They still use paper. Things, to Andrew's point, things take time. They use paper. They use checks still. You've got to mail them around. Some states are starting to get electronic sort of logins to be able to pay state taxes and other bits and pieces like that. But the time piece, I think, is such a key one there from Andrew, that you think it's going to be quick, or you might be able to resolve something a lot faster, but everything takes longer to get things done. But yeah, get ahead of the curve. You're not going to be sort of upset that you've got too much information about what you're doing before doing it. So yeah, learn as fast as possible.
Yeah, indeed. Brett, anything you'd want to add on that benefit of hindsight conversation?
Yeah, I mimic all of the above. I just think sometimes it's important to sort of step back and remind yourself that the US is the largest market in the Western world, and it absolutely warrants the time and mental investment to get it right. So it's a big task. It's timely. It can be expensive, but for good reasons. You'll thank yourself later for putting in the groundwork up front.
Yep, indeed. There's a question that's coming from the crowd, probably relates specifically to this last question I've asked. Is there and I'll open it to the floor. I know what your answer will be, Chris. Is there a certain level of volume or sales from a cost benefit of going with a provider for sales tax, or should you just set up from day one on a tool like Avalara? Chris, I know your answer. So from day one. Cameron, you've been through the process of migrating to Avalara or a sales tax tool. Would you have recommended it was in from day one?
Yeah, it's a good question. Full transparency, we didn't. We were umming and ahhing, when was the right time, and we didn't turn Avalara on from day dot. It was, when you're going into a new market, if you've got a huge amount of funds behind you and capital that you can go and invest and do it from the get-go, then I'd recommend to do that. But we were startup mode, and funds back then, this was prior to me joining, were limited, and you're going into a brand new market and investing in capex of warehousing and stock and things like that, and it was parked to the side initially. So there's definitely a cost benefit, I guess you can weigh up. Chris probably doesn't want me saying that, but yeah, it comes down to the type of business you are and the risks, and the states as well. Understanding every state's a little bit more aggressive than the others when it comes to a tax office. So where are you going? California is pretty heavy on that side of things, but because we were only really selling there to start off with, we chose, we were doing it obviously in California and collecting sales tax, but it's just those other markets. It's understanding where you're putting a stake in the ground, be it a physical or economic. So yeah.
And I think to add to
Yes,
that,
Chris.
I'd say that
Absolutely.
just have an awareness of when you need to turn a solution like Avalara on. I deal with fashion companies all the time who are not hitting nexus in each state, but they could do very quickly. If something goes viral or they get an amazing collection, it could happen very quickly. So if you're underneath nexus and you're only dispatching from Australia, which is easy as, then you might not need a solution immediately, but be aware of what is out there so that you can turn it on, dedicate internal resource to it as and when that you need to, so that you're not looking back, oh, we've got to backfile taxes. Oh, we didn't collect this and we should have. We're on the hook for this now. So just have an awareness of when the time is right for you to implement any tech solution.
Yeah, absolutely. I think there's a phrase that I coined a couple of years ago on the Lunchtime Live stage. CFO Magazine stage at a symposium. It was finance eats last. And Cameron, your answer there is sort of that approach that we often take, is that we put all the money into the things that are going to generate the product, but when we think we'll just manage it, on ourselves in a manual fashion. But is there a benefit to that in the long term? And I think that, as to what Chris said, is understanding how that works. And then I'll come back to that question, but there's a good segue into another question from the audience, and I'm going to direct it to you, Chris, because it's very technical around your solution. Because this comes to the whole thing of knowing when things change and knowing maybe when you get hit nexus and those rules might change. So, Chris, what are the channels that Avalara have that enables them to stay up to date with rate and legislation changes, 13,000 of them so far this year, I think, as you said, or well over 10, and incorporate them into the application in a timely manner? How do you do that?
Yeah, great question. I sometimes flippantly answer this by saying we've got people locked in a basement looking at these things, but it's not so far off. We have a dedicated team who are constantly looking at any updates on any tax change across the whole of America. And you'll find the team say, whoa, we've just found that children's socks have changed in Florida. They've now got different tax rates, whether you're size 4 to 11 or 11 to whatever. And then they are updated as soon as we possibly can, is the answer to that. That will then go live into the back end, so you know that you're charging the right tax. We also then publish all of those updates, so they're all visible. And those changes happen. We do that publishing on a monthly basis. So to answer the question, we've got a dedicated team who really enjoy finding these things and then making sure we're up to date, because it's totally what we have to do. We have to be providing all of our customers. Absolutely, it's the core job. Because if we tell you a rate is different, it's incorrect, and that's then leads to problems. So we have a dedicated team doing exactly that.
And
not locked in a basement.
Not locked in a basement. It's the same question around cyber. There's often a question. In the old days, was cloud safer than on premise? And the answer when I was working at Xero was, well, we spent a lot more on cybersecurity than any individual accounting firm will ever spend in 35 lifetimes. So it's a similar thing, that you have a compliance team there that is not in a basement. I'm sure it's a nice office, and they're watching this day after day, hour after hour, to look for these things. And that example you gave of socks, I don't think you're joking. I think you're probably giving probably a real life example. And I think I think that's the confidence you want to have in a provider, that you do have that safe pair of hands, not only that they're managing just the actual filing and calculation, but also that the rates are correct. Is that a fair comment, Chris?
That's an incredibly fair comment, and the SOX is a live example. I tend to use SOX as a lot of live examples, because if tax is complicated on SOX, then it's going to be a
You
lot
can
more
imagine.
complicated on other items for sure.
Yeah, indeed. So I'm just going back to that other question about the cost benefit. Andrew, do you have a view on, maybe it's a hindsight thing, do you have a view on staying manual for a while and then going to a solution, or solution from day one? And you gave the example, you went from the smaller brother to the big brother.
Yeah, I think our scenario, James, is probably a little bit different. We're a mature business that considers ourselves having a startup in the US. So, from day dot, we probably weren't prepared to go to an interim step before we go to a full solution. So the business is a bit different to fashion retail. But so, we basically were backing a strategy, and so we went with Avalara, and we were first exposed to it straight away. So probably didn't give it too much thought, to be honest with you. We're backing in the complexity, knew based on upfront research that it wasn't going to be easy, and so went to find a solution straight up.
So I guess then, and I'm going to ask the same question of you, Brett, but certainly from your response, Andrew, and yours, Cameron, depends on the business, depends on how, where you're at, depends on your investment thesis into that area, but also it might have not even be a size and scale discussion. It's, do you want to have any risk associated with that from day one, depending on your business? So Brett, your view on that specific question, is there a benefit of waiting, or is it better to be going from day one?
I'll speak from my experience with Dish.
Absolutely.
So we're obviously retail fashion business that sells directly to the consumer. We have quite a significant marketing budget. When something goes viral, sales spike. We could have put Avalara in back in 2021. We've recently got our eggs together and got registered in the States. I don't think we actually could have done it quicker, because we've just grown so quickly, particularly in the US market. We've had to get the right people internally who understand that side of operating in the US, do a bit of upskilling ourselves, and then press go on becoming compliant. There wouldn't have been an opportunity to wait and gone, let's see in which states we cross nexus. I was looking the other day, there was a 3-month period where we reached nexus in something like 12 states. So it's not something with that level of growth you can manage without some sort of tech solution. But again, it obviously varies business to business. It would be very different if you're sort of operating in 1 or 2 states. But yeah, if you're in direct to consumer in a retailer, then that's something to be wary of, is that exponential growth that you could see at the beginning. Try and keep up with that.
Yeah, absolutely. A couple of good questions that come in, so I'm going to throw them out. We've got about 12 minutes left, and then we'll move into our final ones. Might be a question for you, Chris. Can you comment on the selling of B2B SaaS into the US, and if there's any differences there or fishhooks that should be aware of when it's B2B SaaS as opposed to e-commerce or digital presence?
Yeah, each state has its own different rules. California, for example, with SaaS is not taxable. Other states it is taxable. It's just get an understanding of exactly what the product is, which states it's being sold into, and then the rules behind it. So happy to provide further information if there's any specifics to that question after the call. But yeah, it really can vary, as it can with almost every other product and state.
And that's where Extra sits in that B2B SaaS. Do any of the panel members have on-the-ground finance teams in the US?
Not a team, no. We've got some individuals playing roles, but not an established team at this point. Largely domiciled from here.
So you're nodding your head, Cameron. Any benefit to having that, as opposed to just a team in New Zealand or Australia? Did you hear that, Cam?
Oh, sorry, James. Sorry, mate.
Oh, yeah, Cameron. I saw you nodding your head. So you've got a presence, a finance team in the US. Is there a benefit to having that?
Only one. We've historically always
Only
done it out of New Zealand for the back office function of finance and tax and compliance. But in, I think it was March this year, we actually hired a on-the-ground accountant for the US business, which, probably would have, in hindsight, should have done it sooner.
A question: how are you guys managing? I was going to ask this. I thought maybe it didn't relate, but the W2, W9s, the 1099s, and the Fed taxes. I mean, how are you managing these on top of your sales tax, or have you been able to automate those as well? Andrew or Brett, you want to go first?
Comes down to system as well, with all the payroll systems in place. So it's just another challenge. There's a lot of, I think we're still learning some of the variations around that, but we're very conscious of it. It's a system handled process and a little bit different in every state again. So that's the most simplistic way I can answer it. That's a technology. We probably are moving very close to having a dedicated payroll person onshore. In light of the growth of people. So we are, unlike what we did with Avalara, we're playing the journey as we're growing through it. So the time's right to get some expertise onshore in that regard.
More motherfunners, more complexity. Cameron, I'm assuming you've got, like Andrew, people. What do you call your team members? You've got people on the ground. I mean, how are you managing all of those other compliance issues? It's tech-based as well.
Yeah, we partner with ADP for all things people related, which have been a great partnership. They've sort of been an HR partner as well, so supporting the team there for ER queries, questions, EAP, the whole sort of platform that they can support with. So they actually do all the tax filings in all the states. We've got obviously 2 physical ones in North Carolina and California, but we've got remote workers like sales reps in different states as well. So they help with registrations from an employment perspective. So getting partners. And then when it comes to the tax side of things, we use KPMG out of Canada that actually support for income tax, and just getting the right partners in place to be able to make sure you're doing things right, for sure.
Absolutely. Brett, have you got any exposure to that yet?
Not yet, fortunately. However, we're actually in the midst. We're actually in the midst of implementing. Well, we're launching Employment Hero. And so when it came down to the vendor selection process, we wanted to make sure that they had, the ability to facilitate bringing people on in the US. So, fingers crossed that all goes smoothly. But as we know, US is a beast.
As we discussed today, the chances are it's not.
Yeah.
That's it. Well, it's been an excellent discussion. We've certainly covered a lot of ground and dived into a lot of good topics. So thanks to all of our panelists today. We're going to go to our closing questions. Chris, we can't have a lunchtime live this year without mentioning AI. What new and evolving technologies can CFOs expect to see around the cross-border taxation?
AI, I could talk about it all day. I'm absolutely fascinated by AI and where it's going to take us, from my kids writing presentations using ChatGPT and my wife, who's a teacher, scolding me for it, through to how it's going to change our everyday lives. But basically, AI is just a tool to improve our working lives. And that's, I think, how we should look at it and how it develops. We've developed a solution for HS codes, for example, where effectively we take a whole catalog from a company, run it through our AI solutions, and come back with what we believe is the correct HS code, which can be very important when you're dispatching cross-border. And you can bet that different governments and different customs are doing the same thing, because they don't want to be missing out on any duties and taxes. I recently put 100,000 products through it, and we got some curly ones back. So For example, we use the word spanner in Australia, but they're selling them to America and it didn't recognize the word spanner because they'd call it a wrench. So our AI looked further down the product description and the spanner was in a plastic wallet. So our smart system thought, hey, this is a plastic wallet, and attributed that HOS code for it. So it's still developing. It still sometimes needs manual checks. But again, it's just another tool to help save time, make things more efficient, and allow your company to focus on the more important things.
Absolutely, indeed. Andrew, what's next for you on the agenda for yourself and FundLab with technology, automation, and digital transformation?
Chris mentioned time, so we've been investing a lot in technology and products just to improve experience, and not just with guests but with employees as well. So doing anything to reduce transaction time with FundLab, whether you're a customer or an employee, is what we're trying to do to create more time for people to play, in our venues or to serve in our venues. So that's a never-ending task. Specifically to the US, we've got a number of universal of our applications, HRIS, CRM, and a couple of other things that will be rolled out, which have been deliberately chosen to cater for a global market. So there's some things ahead for us. And then we've also been investing a hell of a lot in digital transformation. We've got a lot of digital assets and tools there, and really for us is to maximise those and optimise them. So I mean, it never ends, to be honest, James. You can't get in front of it. You just keep going through the journey and trying to get better and better.
Yeah, absolutely. I'm going to break from regular program because I've got a question I do want to ask, and feel free to not be honest if you like, but honesty is always good on here. For the guys that have launched into the US on the panel today, what are the costs? What are the costs you've underestimated while considering your expansion to the US market? What have you gone, gee, that's cost us a lot more than we thought it would? Andrew, what do you think?
If we thought our building costs in Australia had gone up through COVID, I was surprised how much they'd gone up in the US. So that's an easy answer for us. Building costs.
Very good. Building costs. Cameron?
Yeah, there's a lot. The rental side of things, there's even some OPEX costs of things that just are different, higher water, water on a big, massive warehouse. It's done on a square foot. There's a whole bunch of different things. It's just every country is different in one way or the other. Yeah, for sure.
Very good. And Brett, anything that you've found is more expensive as you've expanded into the US?
Yeah, well, look, we don't have a physical store yet, but initial DG suggests that it is, could be double what we pay here. But I think a cost to highlight. I think advisory fees, whenever they're around cross border, I think they've got a premium on them because you've got the US team and the Australian team for an advisory company or a big four, and they try and talk together and work together, but they're both experts in their own domain, and that attracts a premium. We could have gone down the path of leveraging more of advisors, and we had to really rein it back because the cost would have just completely blown out. So it's something to be cognizant of. Is don't be sold the world by professional advisors. More important, so that highlights the need to really get on the front foot and learn and do your own research and upskilling.
Yeah, absolutely. So Brett, back to the final two questions and then the final one for you, Cameron. Brett, what does the next 12 to 24 months look like for Dish? You've mentioned a few new things that are going on as we talk today. Any new markets, innovations, or new technologies you can share with us?
Yeah, look, going global is always exciting, but one key lesson we've learned is it's not lose sight of what got us here in the first place. I think for us, Australia remains a crucial market, and it's one we'll continue to protect and invest in aggressively. But at the same time, we are enhancing our international experience for international customers by localizing our website. So this means making sure that they can shop in preferred currency, use preferred payment methods, and receive customer support in their own language. So there are a few providers in the space. We've chosen to go with globally.
Sorry, I cut you off. Z's instead of S's is certainly the case in the US for a number of things. But it is very important that localized website experience does make a big difference, particularly too if you expand into non-English speaking areas. So thanks for that, Brett. And Cameron, final word from yourself. As we've heard today, the US is such a massive economy and a great opportunity if you get it right. How important is the US for AS Colour over the next 5 years? Are there any plans to grow further?
Yeah, it's still a big focus market for us. I mean, there's 300 plus million people there. We still think we're only just starting to scrape the surface. Looking at doing another potential warehouse in the Midwest near Texas, and being able to get closer to customers again. So yeah, Canada is probably next on the list, but we're also looking into the European market at the moment, and putting a stake in the ground in Amsterdam, Netherlands, to help service that side of things. So doing all the VAT setup and getting into that whole ball game. So yeah, keeping us on our toes.
Fantastic. And I'm sure, Andrew, if you need some T-shirts, you know the guy to speak to today. And that brings us to the end of, that's it. Fit those motherfunners out in AS T-shirts. And that brings us to the end of today's Lunchtime Live. Many thanks to our panelists, Brett, Greg, Cameron Irons, Andrew Wilson, and Chris Calvary for sharing your thoughts and experiences with us today. Thank you again, panel.
Thank you.
Thanks, everyone.
Thank you. Again, Avalara for their support with today's event and continued support of the CFO Lunchtime Live. Thanks to everyone who's tuned in today from around Australia and New Zealand. I hope you got as much out of today's discussion as I did, and a full recording will be made available later this afternoon and emailed to you. But until next time, I'm James Solomons, and I look forward to bringing you another insightful discussion on the next CFO Magazine Lunchtime Live. Enjoy the rest of your day.